Today, I will show you how to find weaknesses in other people's algorithms. Watch this video to the end and you will understand how to make 15% 12 hours. Let's go! Hello dear friends! This is AgentWXO and this is the 5th lesson in our lecture series on algorithmic trading for traders, market makers, and everyone who wants to earn on autopilot. My algorithm is based on my personal hedge fund experience and the approaches used by professional market makers. With it, you can automate dozens of strategies and earn income without being glued to your monitor. If you are not yet subscribed, now is the time to do so. It will only get more interesting and useful from here. The topic of today's lesson: trading against algorithms, algorithmic scalping. Today, we are breaking down one of the most complex topics: how to configure settings so that an algorithm works against another algorithm. Algorithmic scalping is a fast way to earn, but it is riskier than classic market making, so it is important to understand the logic in detail. Preparation. Reading someone else's algorithm. The most difficult stage is preparation. To see how a competitor's algorithm works, I open Bondar's terminal and look at the trade feed in graphic form. In a regular terminal, these patterns are barely visible. Have you noticed how orders appear and are canceled in the order book? This is a sign that a market maker is working and adapting to the market just like us. Our task is to find an inefficient market maker, a highly inefficient market, a highly unpopular cryptocurrency. On major exchanges, this is almost impossible. Professionals with serious capital and good algorithms are working there. But on third-tier exchanges, you encounter unqualified market makers. Our task is to find vulnerabilities in them. We see a large buy order. The price bounces off this wall. We set up the algorithm to buy bit by bit at the wall and sell slightly higher, or vice versa. We work short if the currency has already been purchased in advance. Configuration settings. This method works great with small deposits and poorly with large ones. So the order size should be minimal. Order amount $6. You shouldn't set it any higher. Why so little? The larger the order size, the faster the market maker's algorithm will notice you and adapt to your behavior. The goal is to be invisible. Total amount quota from $60 to $100 per pair. Recreate order interval half a second, because on third-tier exchanges, the API often can't handle faster speeds. And order lifetime 2 seconds so as not to overload the API. Take profit up to 1% and ideally even less. Spread. We work at a narrow range, narrowing the minimum and maximum spread to the limit. It is undesirable to trade more than $100 on one pair, otherwise other algorithms will start tracking you. One algorithm server can easily handle 2 such pairs simultaneously. A real-life example, 15% 12 hours. That is exactly how results are collected little by little. How to look for patterns. In the Bonder terminal, we watch where order density lies, which levels drive trading volume, and how other algorithms react. A sign that an algorithm is active on a pair is repetitive. Orders for the same amounts, for instance, every second it buys or sells the exact same fixed amount. This is visible in the order book and the Bonder terminal. Identical numbers appear on both the buy and sell sides at specific levels. To find suitable pairs, we use a screener with parameters: percentage, price change, trades per minute, dollar volume, spread width, and activity. Bong Lai and activity. Pairs that move sideways or form recognizable patterns like brushes or ladders are ideal. It is also important to choose pairs that are not at risk of sudden delisting or scams. I analyze all these configurations in detail and share ready-made settings only with members of the Algorithmic Traders Club. If you want to get ready-made configurations instead of building them from scratch through trial and error, the Telegram link is in the description. Come in, subscribe, and join. Now I will show you live how my algorithm works against another algorithm. You see, it places orders of $6 in the book and monitors what is happening inside the order book. As soon as it sees an opportunity, it buys, then sells. The narrower the spread, the more aggressive the trading. The goal is to configure everything so that trades happen frequently, but the spread isn't too narrow. And as soon as a large seller enters the book, we see it immediately and catch the moment. Friends, I want to say a special thank you for your support. It is thanks to your likes, comments, and donations that I can make these lessons free for everyone. Every like and every comment is real motivation to create more content and dive deeper into complex topics. If this video gets 1,000 likes, I will release a separate video where I will visually demonstrate in the Bonder terminal how I trade algorithmic scalping against another algorithm. Everything lives step by step. So hit the like button and invite your friends. The faster we hit 1,000 likes, the sooner the video will be released. Subscribe to the channel and join my streams where I trade live. We are on the path to success.